Okay, good morning, everyone. US stock market, the Dow has earlier raised from the recent peak of around the 27,000 psychological level. Since then, we are seeing a renewed volatility on the US stock markets as the Dow has pulled back below the EMA 20 level, below the 26,250 points. Since then, we did see a two consecutive days of sharp selling pressure on the US stock markets, with Dow falling below the EMA 60 and also the EMA 120 level, and subsequently retesting the 25,000 psychological level on the Dow Jones Index. So for now, on the Dow Jones Index, we'll be monitoring for this trend line, which is around the 25,000 psychological level. Should this trend line were to be breached, further pullback will be further phase will be seen for the Dow Jones towards the 24,250 points, or even towards the 24,000 psychological level. In the meantime, any gains for now will just capped towards the EMA 120 before the next pullback were to resume. So the volatility on the US stock markets was stemmed by the concern over the rising US interest rate, with the fund downgrade on the global economic growth. Likewise, the has earlier retraced from the 2940 level. Since then, we are seeing a sharp pullback below the 2900. Since then, the S&P 500 continues to trend lower, and subsequently it violates below this trend line as well, which is around 2050 level. So with this trend line and the sharp pullback, we are seeing we could expect further pullback on the S&P 500 should the S&P 500 could not hold above the 2700. Further be seen towards the 2625 or even towards the 2600. In the meantime, any gains for now will be just capped towards the 2800 psychological level on the S&P 500. Okay, some updates on the crude oil prices. The crude oil prices has from the 65 US dollars barrel level. Since then, we are currently on 87. However, there's a lack of flow-through by interest beyond that, and subsequently the crude prices that we might see further corrective phase on the or even back towards the 60. The meantime, for now, just towards the previous resistance, which is located towards the 73 US dollars barrel mark. The weakness on the crude prices was also in tandem with the global equities sell-off, coupled with the resumption of buying of Iran production, crude oil production from China and also India. Okay, some of this on the FMKLCI has earlier been trading between the 1770 towards the 1830 level. Since then, volatility in the global, we are seeing the FMKLCI sharp bearish candle on the 11th of October, on the 10th of October, and the next we are seeing the gap down formation on the FMKLCI, despite the hammer candle being formed on yesterday, with the key index recovering some of its intraday losses, tracking the continued sell-off in Wall Street and also the weakness in the CPO and also the crude oil prices. We could expect the ringgit LCI to continue to tank towards the 1660. That will be the immediate support level for now if the 1700 level were to give way. So if should there be a bargain hunting activities for now, any gains will be just capped towards the or just limited towards the 1730 level on the FMKLCI. All in all, look at the weekly chart. You're certainly seeing bearish formed over. We can see that the KLCI has then recovered from the 1660. However, those was being formed last 2 weeks, the FMKLCI fallen 9, 20, and 60 level, and this week is likely to below the EMA 120. And if the FMKLCI were to plunge below the 60 level, this could be the potential head and shoulders formation that we are seeing a further correction phase on the FMKLCI towards the next support level located towards 1560 or even towards the 1500 level over the mid to longer term period. All in all, indicators wise suggest that uh, we are seeing some of the negative momentum with FMKLCI violating below the 1770 or the EM and also the EMA 120. The MACD indicator has really issued a sell signal on the weekly chart. The RSI is pointing towards the 50 level as well. The liners wise is been trading on a similar manner, more on negative, with the bearish candle being formed on the 2nd of October that we have mentioned in our potential stock discussions group. We expect the FM small cap index to likely to trend towards the 13,640 points level. So on yesterday itself, we see the violation below that with the FM small cap index gap down. So for now, we could see further correction phase on the FM small cap index towards the immediate support is located towards the 13,100 points. If the 13,100 points cannot hold, then we might see further pullback towards the 12,600 points and level on the FM small cap index. All in all, the FM small cap index is also quite on a negative traded on a negative momentum, with the indicator pointing the sell signal on the MACD. The RSI has retraced below the 50 and is currently at the oversold position. Now, any recovery will be just cap limited. Any recovery will be just taken as a technical rebound play that we could adopt the selling the strength strategy towards the 13,600 points on the FM small cap index. On stocks wise, we can watch out for first is D-Sonic. D-Sonic is still on a downtrend of formation, so any recovery from now as a technical price in trading rejecting them away. Subsequently, we are seeing a good recovery pattern on along the 60 cents level on D-Sonic, as price has formed a good bullish engulfing candle accompanied by some of the improving volumes as price closed above the EMA 9 level. So for now, we could expect D-Sonic to stage a further recovery to 7.5 cents or 8.5 cents. That will be the first and second target price for now, and 60 cents on D-Sonic. So with the bullish candle being formed on yesterday, any pullback will be a healthy pullback for now before the next recovery to resume on this. On Ronma, retrace towards the recent low of the 76 level. See oscillation between the 6 cents towards the 81.5 level on as price forms some of the bullish candle or some of the accumulation of cents, we can trade from towards the 87.5 cents or even towards the peg below the 76 cents on Ronma. Be quite positive on our Ronma indicators. As you can see that the MACD indicator has been higher low formation. The MACD histogram has turned green yesterday after the last 2 weeks trading period. Stage a very strong see a recovery pattern on gas as price has bullish candle to an 80 level after price forming the Georgia candle on the 247. Since then, we are seeing a good the 184 cents as but to retest the EMA 9 level yesterday. We accompanied minor improvement. So for do not monitor for this will pretend a you can confirm free on Burma's auto towards the or even towards the 220. Your stop loss point will be located below the 184 cents level on Burma's auto. Last company for the day will be CBIP. Yesterday, despite the big market sentiment, we can see that MACD indicator sorry, 120, the 108 stop loss located if there's a breakout above the 115 cents level on CBI. Any questions? Put and the more briefing.
For multiples, right? But